Good morning. Here is today's Korean economic news briefing. Today's economic landscape is heavily influenced by escalating geopolitical tensions in the Middle East, leading to significant volatility in global financial and commodity markets. This has prompted the Korean government to take swift and decisive action to safeguard the national economy. Deputy Prime Minister and Minister of Economy and Finance, Koo Yoon-chol, held an emergency meeting with international financial market experts yesterday. He emphasized the government's firm commitment to intervening promptly if the Korean won's movements deviate excessively from its economic fundamentals. The Deputy Prime Minister explicitly attributed the won's recent weakness to the heightened Middle East risks, expressing confidence that a resolution to the conflict would naturally stabilize the market. Furthermore, he highlighted that the expected passage of the Currency 3 laws in the National Assembly would significantly contribute to foreign exchange market stability, alongside ongoing institutional improvements like the potential inclusion in the World Government Bond Index, or WGBI. These legislative and systemic enhancements aim to bolster the won's resilience against external shocks. Reflecting the deepening concerns, the government has also raised its crude oil crisis alert to the caution level, signaling a heightened state of preparedness. At an emergency economic ministerial meeting, naphtha was designated as an economic security item, underscoring its critical importance to the nation's industrial base. The government is now actively considering measures such as releasing strategic oil reserves and implementing demand-side controls, including a potential vehicle odd-even system, to manage energy consumption. However, in a notable exception, electric vehicles are expected to be exempt from such restrictions, a move that could provide a much-needed boost to the domestic EV market. Beyond these immediate measures, the government has pledged 1.5 trillion won in financial support to companies affected by supply chain disruptions, recognizing the widespread impact of global uncertainties. Minister of Trade, Industry, and Energy, Kim Jung-kwon, stressed that the current Middle East situation represents a structural crisis, not merely a temporary setback, necessitating fundamental shifts in Korea's industrial and resource strategies. This external pressure, however, is not the only factor at play. The global monetary policy environment also casts a long shadow. The U.S. Federal Reserve, following its Federal Open Market Committee meeting, decided to maintain its benchmark interest rate for the second consecutive time. Fed Chair Jerome Powell's remarks were distinctly hawkish, stating that rate cuts will not happen if inflation progress is not seen, and surprisingly, he even acknowledged that discussions about potential rate hikes had taken place among committee members. This hawkish stance, combined with a significant drop in U.S. fourth-quarter growth to 0.7%, half of the initial estimate, sent shivers through global markets. New York's major stock indices, including the Dow Jones, fell by over 1%, while the dollar index surged past 100, indicating a strengthening dollar against a basket of major currencies. The Fed's hawkish pivot has significant implications for the Bank of Korea. Given the persistent inflation pressures from surging oil prices due to the Iran situation, and the potential for further $1 exchange rate volatility, already hovering above 1,500 won per dollar, the Bank of Korea is now highly likely to maintain its benchmark interest rate at 2.50% in April. Widening the interest rate gap with the U.S., currently at 1.25 percentage points, could exacerbate capital outflows and further weaken the won. Some analysts even suggest that if high oil prices persist, the timing for an eventual rate hike by the Bank of Korea could be brought forward. Meanwhile, the Bank of Japan also froze its benchmark rate at 0.75%, expressing concerns over stagflation due to rising energy costs in import-dependent economies. On a slightly more optimistic note, the American Chamber of Commerce in Korea, AmCham, forecasts Korea's economy to grow by 2% this year, largely driven by the semiconductor boom, aligning with their global growth projection of 3.1%. These macroeconomic headwinds immediately impacted Korea's financial markets. The Kospi Index experienced a sharp decline, falling by 2.73% to close at 5,763.22, giving up both the 5,900 and 5,800 psychological levels in a single day. This significant sell-off was primarily driven by the hawkish FOMC message from the U.S., the surge in international oil prices, and the depreciation of the Korean won, which briefly touched 1,501 won per dollar. Foreign investors, who had been net buyers the previous day, turned sharply to net sellers, offloading 1.88 trillion won worth of Korean equities, further intensifying the downward pressure. Shifting to the industrial sector, the government is conducting an emergency review of advanced industries, acknowledging the triple variables of trade, Middle East risks, and artificial intelligence. Despite the broader uncertainties, there are notable bright spots. In the automotive sector, Porsche Korea announced that all its pure electric vehicles sold in Korea starting this year will be equipped with battery cells from Korean manufacturers, a significant boost for the K-battery industry. In robotics, Hyundai Motor Group's subsidiary, Boston Dynamics, has seen its corporate value soar to an estimated 30 trillion won, a remarkable 24-fold increase since Hyundai's acquisition in 2021, highlighting the immense potential in this future-forward industry. The AI sector, in particular, continues its robust expansion. Micron Technology, a global memory semiconductor giant, reported record quarterly earnings, with revenue nearly tripling year-on-year, driven by exploding demand for AI-related memory. This strong performance serves as a positive indicator for other major memory chip manufacturers like Samsung Electronics and SK Hynix. In a sign of strengthening collaboration, AMD CEO Lisa Su met with Korean officials, including Presidential Senior Secretary Ha Young-woo, to discuss cooperation on Korea's AI 3-strong strategy, focusing on building an open AI ecosystem and nationwide AI infrastructure. The National AI Strategy Committee is also actively discussing policies for sustainable employment in the age of AI, recognizing its transformative impact on the labor market. Even the virtual asset industry is embracing AI, with major exchanges introducing natural language AI trading and AI-powered payment solutions, transforming their operational and security infrastructures. However, some traditional sectors face challenges, with the steel industry's crisis reaching an unmanageable level, according to Representative Lee Sang-hee, calling for robust government support to prevent it from undermining the broader manufacturing base. Finally, in the real estate market, Seoul's apartment prices showed a continued trend of slowing growth, with the rate of increase narrowing for the 7th consecutive week. Specific districts like Seongdong and Dongjak have even seen prices begin to decline. While the larger 84 square meter apartments remain popular for buying in Jaeon's long-term deposit lease, the monthly rental market is seeing a shift, with 59 square meter apartments now accounting for a higher volume of transactions. Interestingly, approximately 2,000 apartment listings have recently emerged in Seoul, reportedly due to the impact of property taxes, especially for high-value single homeowners. Despite the overall slowdown, specific new developments, such as the Remian Elevine in Gangseo-gu, continue to attract significant interest, with some units seeing competitive ratios of over 200 to 1, demonstrating localized pockets of strong demand. In summary, the Korean economy is navigating a complex environment characterized by external geopolitical risks, a hawkish U.S. Federal Reserve, and rising inflationary pressures, particularly from energy prices. The government is responding with proactive measures to stabilize the secure energy supplies and support industries. For investors, the current market calls for caution due to heightened volatility. However, the robust performance of AI-related sectors, the positive outlook for K-batteries, and the strong growth in robotics indicate potential areas for long-term investment. General viewers should remain aware of the ongoing inflationary trends and their impact on household finances, as well as the government's efforts to mitigate these challenges. That concludes today's economic news briefing. Thank you for listening.